on risk assessment within supervised financial institutions in Uganda, and specifically the banking sector. As many of you know, banks play an important role in the financial sector through the provision of various products and services. And for those who enjoy the products of the banks, you can imagine what technology has enabled them to do. The products and the services are just probably the innovation in this sector is just out of the league. But as those products and services are being rolled out, they present a certain level of risk. And one of that risk is that some of these products offered to clients can be avenues that can be used by money launderers to obscure illegal sources of funds and other assets. And as supervised financial institutions, you have a responsibility. This responsibility is actually placed on you by the regulator. And in this case, we are talking about the central bank and the Financial Intelligence Authority. Financial institutions are required to identify, assess, and understand the money laundering and terrorist financing threats inherent in their businesses. The money laundering threats definitely would require that financial institutions put into place controls and establish the necessary really environment that will reduce and mitigate the risks that arise from money laundering and terrorism financing. So those anti-money laundering procedures, the controls or the counter financial terrorism controls that you put in place are a requirement from the supervisor. Thank God, most of, we have good regulators here in Uganda. Both the Bank of Uganda and the Financial Intelligence Authority have provided some guidance. And many, if you really work in the financial services sector, I'm sure that you know that there's a common understanding of the risk assessment that is expected of you.
Network is on and off.
You're able to hear me now?
Yes, I can hear you now.
Okay. So basically, I was just saying that as financial institutions, you have a responsibility to make sure that you put into place the controls. And the regulator has provided some guidance. Now, one way of making sure that you identify the risks is that you must obtain information from various sources. And one of that source is the National Risk Assessment Report. I don't want to take away what Madam Fiona, and I want to thank Madam Fiona for being kind and gracious enough to accept to take you through the National Risk Assessment Report for Uganda that is recent, 2023. And as you might be aware, this is an update of the 2017 exercise. She will take us through, but I just want to reemphasize that as supervised financial institutions, you need to pick information from that report so that you can be able to tailor your controls, tailor the processes to take into account the information in that document. So as BDO, we thought it is important to organize this webinar so that we can empower you, we can share with you our understanding, the knowledge, and more importantly, give you the confidence and assurance that as a professional services firm, we are there to support your core businesses. We are there to make sure that if you have challenges in navigating this space, we have not only the knowledge and the resources, but also the applications. I understand many of the IT guys don't want to use the word tools anymore because it sounds like a toolbox. So we have the applications to be able to support you, to be able to navigate this space. So I just want to use this particular moment to hand you over back to the moderator to really introduce the BDO experts once again, and Madam Fiona, and take you through this a nice subject. For the next 1 hour or so, I strongly believe you'll find the discussion very beneficial for you as an individual or a professional, And more importantly, you'll be able to apply this knowledge in your esteemed organization. I thank you and I wish you nice deliberations. Over to you, James. James, are you there?
Yes, thank you so much. Thank you so much, Kenneth, for that introduction. Apologies, my computer had an issue, so I had to change it very quickly. But thank you once again, our facilitators. We are going to be heading to a presentation from Fiona Nabagala, who is coming from the Financial Intelligence Authority. And like I introduced earlier, she'll be taking us through the National Risk Assessment Report. But before she comes in, if you have any questions, you may feel free to type them in. These questions will be read to the presenters at the end of the webinar under the Q&A session, in which they'll be addressing your concerns. So Fiona, over to you.
All right, thank you very much, James. And thank you, our appreciation goes to BDO for coming up with this initiative to ensure that the sector is enlightened about the risk assessment findings, because this forms the basis for your next moves in terms of the implementation of the controls to ensure that your risk goes down from the highlighted risk rating, which is high, as we shall discuss later. Mine today, I was tasked to take you through the risk assessment, the findings in regards to the financial institutions, that is in respect to the banking sector. And I was given only 15 minutes, so allow me to dive direct to the presentation. What forms a basis of our discussion today is I'll give a brief background of where this is coming from, why we conducted the National Risk Assessment, and what are the findings in respect to the banks, and what are the implications, and what actions that we need to take. So from a brief background, this originates from the FATF Recommendation 1, which requires all countries to identify, assess, and understand the money laundering risk and terrorism financing risks for the country, and take action by designating an authority, that is FIA, to coordinate the action, the activity of assessing these risks, which explains why we undertook the activity of conducting the National Risk Assessment to inform us of the country risks, to identify the country risks, assess them so that we have a good understanding of the sectoral risks that we are exposed to as a country, as per sector, so that it informs our next actions in terms of mitigating the risks. So just a background of where we were coming from to conduct the National Risk Assessment. It's because we have to comply with the FATF Recommendation 1. And next slide, please. So the interpretative note to that FATF recommendation therefore requires us supervisors to review the risk assessments that have been developed by the financial institutions and other accountable persons. That is why Regulation 8 and 9 comes in to ensure that the financial institutions, the banks, assess, identify the risks that they're exposed to prior to introduction of new technology or product or delivery channel. So our expectation as FIA is that you have to submit those risk assessments, because that is what Regulation 8 says, that the report has to be shared with the authority. Our expectation is an enterprise-wide risk assessment, a general risk assessment has to be conducted, and also the risk assessments prior to introduction of any new technology, product, or use of delivery channel, where you're assessing the risks associated with those products or use of technology. So you find that the rationale behind conducting the risk assessment or assessing the risks to identify your risk profiles is to guide you in the resource allocations so that you know where to put the funds in terms of coming up with the risk management measures to mitigate the identified risks. So we also use the same approach as FIA. Once we conduct a national risk assessment and we identify that the sectors highlighted are high, we select the high risk sectors and we move accordingly in terms of allocating resources, because this is what the FATF recommendation requires, that in our allocation of resources, they should be informed by the risk. So even still at the entity level, the expectation still remains the same. And this is what we call the risk-based approach, which applies both to the reg supervisory authorities and also the entities, the financial system, the financial institutions as a whole. So therefore, in our supervision, it informs us of which entities that we need to subject the anti-money laundering controls or obligations to, and to what extent. So it informs us of the supervisory strategy in terms of the frequency. Next slide, please. In terms of the frequency of inspections. And that is why you see that our focus will be so much on the banks, because they have been highlighted as high risk. So this explains where we are coming from. In order for us to demonstrate a risk-based approach, we are informed by the findings in the national risk assessment, whereby all those sectors that are listed as high risk, then we have to move. We have to allocate our resources. We have to adjust our supervisory strategies in terms of the inspections, in terms of the frequency, in terms of the trainings, in terms of all the strategies that the recommendation requires us to conduct. So therefore, this is very important because the FATF recommendations require us to do so. Next slide, please. So the findings, what are the findings regarding to the different sectors? But before we dive into the findings, it's important for you to know what approach that we use to come up with these findings. We use the World Bank tool, and this tool comes up with the overall money laundering vulnerability of the different sectors and the money laundering threat. So the combination of both is what gives us the overall score of the respective sectors. So this activity involved different sectors, engagements from different sectors, representatives from the supervisory authorities, the regulators, and it has variables that we have to fill in to assess the respective sectors. So the variables relate to, when it comes to the money laundering vulnerability, the variables relate to the controls in the sector. For example, controls in the banking sector. How is it in terms of the controls, the implementation of the AML controls in the banking sector? And with the threat, it relates to the offenses, the cases arising from the sectors being used as a channel to launder the money. So whereby we dwell on the decided court cases where banks are involved, where we dwell on the suspicious transactions that have been submitted to FIA. So this brings us to the findings. Where are we standing as banks? We are the overall risk rating from the combination of, from the combined assessment of the vulnerability in terms of the controls in the sector and the threat in terms of the offenses, we are high. And as opposed to the previously in the national risk assessment for 2017, where we were medium high. So you see there has been an increase in the risk rating for the banking sector. Therefore, we have to ensure that we do everything possible to have robust risk management frameworks, because the controls that you put in place have to be informed by the risks, your understanding of the risks. So we have to try to put our efforts together and see that we understand the risk profiles of each bank, the risk profiles of all the financial institutions at the entity level, so that your policies, your controls, your procedures are informed by the risks. I will not dive into the rest of the sectors because the discussion, the focus of the discussion today is the banks. And maybe the microfinance deposit taking institutions are medium. And yes, the credit institutions are also medium. Next slide, please. So why the banks, the overall risk rating that we have is high is because, as earlier mentioned by Mr. Makanga, the nature of the products that we have as banks and the avenues, the nature of the products that we have as banks are used as avenues by the launderers to obscure the illicit proceeds, that is the proceeds obtained from criminal activities. So therefore they pose a high money laundering threat also. And this, with the threat, we see this from the STRs, that suspicious transactions that have been submitted to FIA. And the next slide shows us the rate of, kindly go to the next slide, please. So the overall as money laundering vulnerability, we discussed earlier that we look at the vulnerability and the threat, and the overall vulnerability was the basis of as an assessment of the weaknesses and deficiencies in the suspicious transaction monitoring, for example, and the quality of the customer due diligence, the effectiveness of the compliance systems, that is where is the compliance function existing in every bank, and is it a complete compliance function? So these are the variables that we look at. This tool, this World Bank tool looks at amongst others. And however much as there are robust systems, integrated systems to detect suspicious transactions, there are still some challenges in regarding to the real-time analysis of or the flagging of the suspicious transaction. So that is why the overall comes to medium high, because of some deficiencies identified in the suspicious transaction reporting system. Next slide, please. So we have in the report, we have the statistics regarding the submission of suspicious transactions, and we see that with the commercial banks, the submissions are really high. However, in 2021, at that time when the national risk assessment was conducted, there was a drop in the submission of suspicious transactions. The credit institutions, the submissions are really low. However, there's an increment in 2020. The MDIs in 2020, there was an increment of 54, and there's a drop in 2021. So this is why the overall vulnerability goes to medium high, because of our analysis of the suspicious transactions reporting, the ineffective suspicious transaction reporting. Next slide, please. Next slide, please. So amongst other variables, the availability of information sources, here we are very high. You relate to the necessary independent information sources to identify the customers. The report reveals that the National Risk Assessment also reveals that the availability to identify, you making reference to the National Registration Services Bureau. It's also rated very high. You're doing very well as a banking sector. And the availability to access to beneficial ownership information, here we are rated low. And this is an area that remained an outstanding action item on the action plan that really lagged us behind on the gray list, and we really had to address it. And this explains the pressures behind the banks to ensure that they obtain adequate beneficial ownership information so that we sufficiently address this. So these variables are assessed to inform us of the vulnerability in the sector, where the quality of the customer due diligence, what informs us of the quality is you being able to refer to the independent information sources, where you are really doing very well, and also the existence or the ability of you to refer to the Registration Services Bureau regarding the legal existence of the company and verification of who you're dealing with to identify the companies. And the rating there was very good. And the availability, however, the availability of you obtaining beneficial ownership information, there we were doing very bad as the banking sector. So next slide, please. Still, the tool assessed the commitment and leadership of the banks, whereby it looked at the effectiveness of the controls, and the controls are really good because now the BOU, the Bank of Uganda, looks into the entry of the businesses in terms of the banks, and the licensing is there. There's an existing licensing system. However, it also looks at the market pressures, the fact that we heavily rely on the financial system, the foreign currencies to conduct international financial transactions, and the correspondent relationships, whereby this indicates that our relationship with the correspondent banks and the international correspondent banks have strong AML systems. So therefore, there the rating was very high. And the availability of the sanction is also, enforcement of the sanctions is also another variable that the tool looked at. And the report indicates that BOU has really done very well in enforcing the sanctions. So the tool gave us a high ranking in that area. Next slide, please. So the effectiveness of the compliance system, which relates to how complete is the compliance function for the banks. And it also looks into the integrity of the staff. The integrity of the staff, the report highlights that there are measures that have been taken to assess, to obtain background information about the staff of the banks. For example, there's an avenue that is used through the UBA. There's an avenue that is used through the UBA to assess the background of the banks. However, there's still some identified integrity breaches, and the next slide shows us an indication of the statistics in regards to the fraud, the falsification, the negligence, the rate at which this happens, and the rate at which the incidences where the banks, the personnel or the staff are involved in these falsification or negligence or credit card related incidences. So the breaches now are what brings us to affect the risk rating in this variable. To next slide, please. So the effectiveness of supervision is medium high. This is evidenced by the work now that is done by the Bank of Uganda. There is a team that is readily available to conduct the inspection, and they've adopted the risk-based supervision of the banks, which gives us a medium high rating because of the controls that we have put in place as the banking sector. There's a rigorous supervision by the Bank of Uganda. Next slide, please. So the vulnerability now also, the threat comes in regards to the banking products, whereby we see that the cases, most of the cases that we have highlighted in regards to the suspicious transaction reports that have been submitted to FIA, and also the court decided cases indicates that the criminals are using the banking products to launder money. We have looked at the vulnerability, what variables that the tool looked at to assess the effectiveness of the existing controls, the commitment of the leadership in the banking sector, the effectiveness of the suspicious transactions, the quality of the customer due diligence, the supervision of the sector. So that is what, when we fed in the information in the tool regarding to the existing status in the banking sector, the tool automatically runs and gives us the risk ranking for each area, for each control. Are you medium high in the effectiveness of suspicious transaction reporting, as we have discussed earlier? So on the other hand, or threats, as we had hinted that what informs us of the threat are the offenses and the STRs that are submitted to FIA. And these are in regards to the banking products, and the nature of the products that you have poses a high vulnerability to the sector, because the deposits that you receive from the legal persons and the current accounts, you have products like the credit products for large businesses, trade finance, you have wire transfers, which were rated medium high. So the factors for these vulnerabilities, because that they are attractive to the criminals, and criminals use them before actually the controls are used, and the nature of the products, the fact that they are cash intensive in nature, and they have a wide coverage in terms of the use by different customers. Next slide, please. So yes, next slide, please. We have discussed, now we are at the threat. The cases below now demonstrate the threat in the sector, where there are scenarios where there's forex fraud in the bank, where the staff get involved in the system of exchanging forex with the customers at a lower rate than the actual banking rate, and they actually pocket the differences. So this leads to the financial losses of the banks, and we see that there is a huge financial loss of about 3.5 billion to the banks in this kind of arrangement that the police detectives revealed to us from the investigations that was conducted. Next slide, please. So there are other cases, court-decided cases, like Uganda versus Seramba David Musoke and 6 others, and also Uganda's versus Udaya. So for Serada, the accused ordered accused ordered that money be removed jointly, about worth USD 1.25 million from an account from the Sudanese account. Next slide, please. And this money was removed from their account. So there was some bit of accomplice conspiracy of the accused with other people, and they embezzled about USD 1,450 from the accounts of the South Sudanese. The money was withdrawn in 3 installments and using fake withdrawal slips by fraudsters who impersonated the real account holders and presented the fake passports. So you see, these cases are now what inform us of the money laundering threat in the banking sector, what offenses are there whereby the bank has been used, whereby the personnel in the bank, the staff in the bank are involved in fraudulent activities, what is the ratio of the existing frauds in the banks where the staff are involved, what other offenses are there, or in the STRs that we have, that we receive as a financial intelligence authority, those that we disseminate to the law enforcement officers, and they do the investigation. How many are being prosecuted whereby there's involvement or there's use of the banks as a channel to launder money? So that is what informed us of the overall threat of the banking sector. Next slide, please. So what then this means is that the report, the tool, the World Bank's tool still gives us a prioritization of where we need to, the areas that we need to prioritize, but not to mean that we have to disregard other areas. So from the assessment of the tool of all those vulnerabilities, the controls, the effectiveness of supervision, the AML staff, because that's also another variable to indicate the vulnerability of the sector, whether the staff in the sector are knowledgeable about AML. The compliance function was found to be really good and really high. The AML knowledge is also another variable that was looked at. So this tool automatically ranks the prioritization based on the performance of each variable. And it indicates that our #1 priority has to be the effectiveness of the supervision procedures and practices. Having ranked the bank as high sector, therefore there's need for effective supervision of the procedures and practices of the banks. So that should be our #1 priority. And also the AML knowledge of the banks and staff should be another priority, and availability of enforcement of administrative sanctions should be the 3rd priority. So the priority now, the tool gives us the priority areas that we need to look at as the sector. So integrity of the staff also should be one of our priorities to look at, and availability and access to beneficial ownership should also be another priority to look at. So in a nutshell, what the National Risk Assessment informs us is that in our dealings as banks with the customers, we need to look out for those high-risk sectors, much as we are high risk as the banks, but also we need to take precautions when we are dealing with the other high-risk sectors. So that you find that the National Risk Assessment is informing you of the sectoral risks, of the country risks, so that you take the necessary actions, whereby if you interface with a client who is from another high-risk sector, you have to adopt enhanced due diligence, because now that is what the law calls on you to do. If, for example, if you interface with a client from the mineral dealers or dealers in precious stones and metals, because that has been ranked as high risk, the casinos have been ranked as high risk, the virtual assets and service providers have been ranked as high risk. So when you're profiling your clients, these are high risk clients, and you need to take the necessary measures to mitigate these risks associated with this. Are you going to do ongoing monitoring of these clients? Because that is the recommendation of the law. You are supposed to profile these clients, enhance due diligence measures for these clients, obtain adequate information in terms of the purpose and the nature of funds, source of funds for these clients. So please make reference to the National Risk Assessment so that you sufficiently identify who you're dealing with in terms of whether they are involved in businesses that are in a high-risk sector as ranked by the National Risk Assessment. But also you as banks, you as financial institutions, you need to have a robust risk management framework in place to enable you in the first place to identify the risk, the bank profile, your entity risk profile, so that you come up with the mitigation measures to enable you to manage the risks, to enable you to come up with the policies. The policies that you put in place, the procedures that you put in place have to be informed by the risk assessment that you have conducted, because your submission of the risk assessment now is what informs us of the risk profile of the banks, and then we do effective supervision, and then BOU does effective supervision based on using a risk-based approach. So from FIA, we recommend that you need to have robust risk frameworks and implement the controls, because it is one thing to have the controls in place, to have the documented frameworks in place, but another thing to do the implementation. That's what recommendation, Regulation 8 and 9 calls us to do, that once you put in place these controls, you have to take measures to implement the policies and procedures that you have put in place that are in relation to the identified risks. Thank you very much for your time. I will hand over to the moderator.
Thank you so much, Fiona, for that wonderful presentation. In my opinion, it has come out very clearly that there is need for not only having internal controls and policies in place, but also ensuring their implementation. The need of having regard to the priority ranking list, not just for purposes of your internal controls, but also in relation to how you deal with your respective clients. So in other words, it's going to be more of a case by case whenever you're dealing with someone in regard to the due diligence you put in place. And I hope the participants have also taken regard to the importance of having beneficial owner information, something that the authorities in Uganda have been pushing for very loudly. So I hope from Fiona's presentation, you've been able to see why that's important as well. At this point, we are going to go to the next presentation from Christina, who shall also lead us to the presentation of Ibrahim. But before Christina comes in, I just want to re-echo what I had said earlier. The participants, you're free to put in any question. You can just go to the Q&A icon on your device and type in your question there. You may put in the questions in the chat, may not make them accessible to us very fast. So I encourage all of us to use the Q&A icon, because in the chat, as people come in and put in other chats, it may not be easy to access your question. We shall be addressing all those questions in the Q&A session. So Christina, over to you.
Thank you very much, James, for your kind presentation. And thank you, Fiona, for your insightful presentation. Actually, as we will see now in the coming slides at BDO, we do believe that the national risk assessment is the starting point of any effective risk assessment. So I'm going to cover a few points that I think are from a very practical perspective. We are going to base ourselves especially in the Bank of Uganda guidelines for conducting a business risk assessment. And we will put a bit of emphasis on why is it important for businesses to conduct business risk assessments, and more importantly, how to conduct them based on the guidelines of the Bank of Uganda, and how can we help you out in this very complex process? Who needs to be involved from the bank institution, from the supervised financial institution? So with regards to, can you please switch off? Yeah. The framework we have already, Madam Fiona has already covered the main international standards milestones with regards to the recommendation number 1 of the FATF, but also applying to the banking sector, we have the Basel core principles of effective banking supervision that requires financial institutions to have some risk management programs in place so that they can mitigate all kind of risk, and also they are included the money laundering and terrorist financing and proliferation financing risk. So if we take the local regulations, we have section 6 of the AMLA, the one that was amended back in 2022, but also the regulation number 8 that stipulate that supervised financial institutions should take different steps so that they can conduct effective risk assessments. As I said, also, we are going to put the focus on the Bank of Uganda guidelines that establish or provide a common standard and minimum recommended steps for companies, especially in the banking sector, banks, for conducting these money laundering and terrorist financing risk assessments. So if you can please skip. So with regards to one of the main questions here is, why is it important? What are the main purposes of conducting this risk assessment? So first of all, by conducting this risk assessment, your compliance function and everyone involved in the risk assessment will identify the gap and opportunities for improving AML/CFT policies, procedures, and controls. But it's even more important for the management and for the board of directors to have all this very relevant information with regards to the risk, because they need to take informed decisions about the appropriate risk mitigation strategies, but also about the risk appetite of the bank, what kind of customers will be accepted, which kind of markets are we going to enter to, in which operations do we want to operate. All these decisions are very important for the business and should be informed by the business risk assessment. Another point that I would like to highlight, and then probably we will touch on at the end of this presentation, is that also we need to ensure that regulators and senior management are made aware of these key controls and remediation efforts. You will see, as probably you are aware of, there is a requirement in the Bank of Uganda guidelines that after the business risk assessment is approved by the board of directors of the bank, same needs to be submitted to the Bank of Uganda within 84 hours. So regulators, they need to be aware of the business risk assessment of the bank. So if you can move on. So next question would be with regards to the how to conduct this risk assessment. So as Madame Fiona pointed out, we should take the risk-based approach that is not only applicable for the countries and the regulators, but also for financial institutions. So we will see the risk-based approach has different steps. The first one would be the risk identification and assessment. So first of all, supervised financial institutions will have to identify, assess, and understand the different money launderings and threats that they are exposed to, and the vulnerabilities in the process too. So it is important that we say that when we talk about inherent risk, we talk about the risk that exists without any control in place. This is very relevant because we will see that when we go through the Bank of Uganda, the Bank of Uganda guidelines, they have identified 4 categories of inherent risk at a minimum. This means that each financial institution will be able to identify other categories of risk, that at least a risk assessment should comprise of the 4 inherent risks that you can see in this slide. First of all, the one with regards to the customer risk, it needs to take into consideration the customer categories. We know that some, as Madame Fiona pointed out, some categories of customer, they pose a higher risk for the organization. That's the case, for instance, of PEPs, politically exposed persons, cash-intensive business, high net worth individuals, but also individually consider the customer might pose other individual threats. For instance, I'm thinking about the reputation of each particular client is when you conduct your adverse media report, your screening, or for instance, the behavior of the customer, the reluctancy to provide CDD documents. So all this should be taken into consideration when carrying out our risk assessment. Another inherent risk that we should consider is product and services and transactions, and identify how these can be exploited by criminals. For instance, we need to discuss, or we need to assess the opacity, the opaqueness, the transparency of the product, if this one can be used for money laundering purposes because it's too complex, or because there is a third party involved that might give instructions with regards to the product and service without us knowing the identity of this third party. So this also is something to be taken into consideration. And then we have the third one would be geographic or country risk. So basically, this will have 2 dimensions. First of all, this risk might arise from the location where the institution, the financial institution, has branches, subsidiaries, or offices. So, for instance, before opening a branch in another country, it is better that we check the FATF list of monitored jurisdictions or under increased monitoring, so that we can be relieve in a way that the AML-CFT frameworks in place on those locations are stringent enough. And then also we have another dimension, that is the location of our customers again. So this is also to be very taken into consideration, especially for terrorist financing risk. We know that there are some countries that can pose a very high serious terrorist financing risk for the organization. So this also needs to be analyzed and assessed. And finally, with regards to the delivery channels and distribution channels, we are talking here especially the involvement of third parties that might act as professional intermediaries or introducers for the company. For instance, in the case of banks, we can think about banking agents, very important, the role within the organization. So once we have identified the different categories of risk, we need to do an assessment. Ibrahim will go through this quickly, of the weightage of each category within the final overall risk scoring, because not all the categories of risk will have the same importance. So as part of this risk assessment identification process, it is, as pointed out earlier, very important to take the outcome of the national risk assessment and other typology reports that we will be fund and sectoral reports. But it's also very important that we internally gather the relevant information so that we can properly assess our risks and vulnerabilities. So it is important that people involved, commonly compliance function, but other frontliners, internal auditors, management, all the people involved in this process, they provide the accurate and relevant information for us to carry out an effective risk assessment. So that would include, of course, information about the company, the size, the nature of the services, the locations where you operate, but also, as we said, the portfolio of customers. How many high-risk clients do you have? How many politically exposed persons do you have in your portfolio? What are the locations? Are they located in high-risk jurisdictions or jurisdictions that are closely monitored by the FATF? This is also something very relevant. And then we need, as I said, to gather also the relevant information of product and services offer. For this, it will be very relevant, the results, the outcome of the national risk assessment, like for instance, if we are offering private banking, wealth management, to be very aware of the risk that this service may pose for the organization. And then finally, the third parties and the distribution channels, the number, for instance, of banking agents that we have, so that we can properly monitor this risk and assess this risk. So the second step in this risk-based approach would be the mitigation. So the supervised financial institutions will need to map all the controls that are already in place within the company to mitigate the inherent risks that have been identified. And only after mapping the controls that are already in place, we will be able to know what is the residual risk of the company, that this is really important. So also in the Bank of Mauritius guidelines, we have seen that there are 6 different categories of mitigating measures. So for instance, we have corporate governance and the role of the board, the audit and the compliance function, the different AML policies and procedures and controls, and the effectiveness of the STR reporting, suspicious transaction monitoring and reporting. Also, Madam Fiona pointed out the number of STRs that are received every year, and this is also a very important and relevant indicator that not only the number, also the effectiveness of these reporting channels. So we will be going through all of this and the different compliance and management information, the different tools that you are going to put in place, a screening tool, business risk assessment tools. We are going to show you the one that has been developed in-house by BDO. So all this has to be taken into consideration so that we can reach the third step, which is risk monitoring. We know that the risk zero, we will never reach that state. We will always have a remaining risk. And this is what supervised financial institutions will need to closely monitor and to allocate more resources to these enhance to the higher risk areas, enhance improvements and enhance monitoring to these high risk areas. So moving on to our risk assessment roadmap. This is I think we see at BDO the risk assessment as a journey that is a very complex process that involves, as I said, multiple parties, that it implies also the first step would be also the development of a methodology that needs to be approved by the senior management of the bank, but also, as I said, the importance of this information gathering process, obtaining the relevant information, and the performance of the risk assessment. These 3 steps that we can see here in the roadmap are the ones that Ibrahim is going to explain more in detail by also using the tool, the BRA, the business risk assessment tool that we have developed in-house. So I'm going to leave the floor now to Ibrahim, and then I will resume with the last steps of this roadmap.
Yes, thank you, Christina.
Ibrahim, we can't hear you. Your microphone is on.
Yes, sorry for that. Now can you hear me?
Yes, I can hear you, Ibrahim. Can proceed.
So I was telling you that this is the BRA tool developed at BDO. So a BRA tool will assist you and your organization in conducting a risk assessment and applying the appropriate risk management, risk mitigating policies and controls. But it's all about has been explained by Madam Fiona and Christina all around how you can do it in practice. It is through a BRA tool. So what is the purpose of a BRA tool? A BRA tool will help you risk assess your business and adopt a risk-based approach. Let me give you a walkthrough of a tool developed by BDO. So basically, the tool created for all the risk factors set out in the Bank of Uganda risk assessment guidelines, which is customer, product, business relationship, and geographical risk. You also have annexes which will guide you to fill the tool and help you to gather information. So first of all, let's go to the methodology, which is the most important one. So this methodology was inspired from the Bank of Uganda risk assessment guidelines published last year, December 2022. Bear in mind that this methodology is not a prescriptive one. If ever you're interested in developing a tool, BDO will assist you, will take your present methodology which you have in place, your current methodology, and we will adapt it to the tool. So for the purpose of this webinar, we have taken the methodology set out in the risk assessment guidelines of Uganda. So what we have done is that in the risk assessment guidelines of Rwanda, it says that you need to assess your risk in terms of impact and likelihood, just like Madam Fiona pointed out in the beginning. So what is impact? It is what the risk have on your business, and the likelihood of it is what is the likelihood of it happening. In fact, you have three different ways of illustrating it. It is in terms of minor, whether the impact is minor, whether the impact is moderate, whether the impact is major. Then you have a likelihood of it happening. So the likelihood is what? Is whether the risk is very unlikely to happen, whether the risk is likely to happen, or the risk is very likely to happen. Then what the tool will do, the tool will automatically calculate the consequence of it. So basically, the consequence is what? It is a simple multiplication of impact and likelihood. So let me give you an example of, let's take the first customer risk. So in the tool, you need in the risk assessment guidelines, it is said that you need to assess your customer, the risk of your customers. You can assess it in a manual way, or you can use a tool which will help you. The tool contains set of questions, lots of questions, which will help you to risk rate your business, your customers more effectively. So how the tool function? Basically, you have set of questions. Let's take the first question. Does your company have non-resident customers? Let's say yes, your company has non-resident customers. You need to assess the impact of it for your business. It is a subjective assessment, but bear in mind for each rating given, you should give a proper rationale. For the purpose of this webinar, let's say that this impact is moderate. And then you need to assess the likelihood of it happening. Let's say for the purpose of this webinar, we take it, but it is very likely. But you will automatically calculate the consequence of it, which is medium high. Let's return to our methodology, medium high. You see, now what you should do is you should assign controls to each risk identified. Controls are what? Controls is about the policies you have, the procedures you have in your organization. So in the tool, we have allocate controls in terms of indicators, which are strong, moderate, needs improvement, and weak. So how you will know whether your controls are strong, moderate, or weak, this is subjective to your compliance team. Your compliance team will know whether all your controls in place are adequate or not. So if a compliance officer, let's say, will assess the control effectiveness, let's say he will say that all your controls in place are strong. So he will put it strong, and he should also give a description of the controls available. In the tool, you have a streak known as control action. Control action is what is a list of controls that companies should have in place. So it is a very comprehensive list. You can go through it. When the compliance officer can look into it and know whether the control in place in his or her organization are strong enough, or whether his controls are weak or moderate, needs improvement. These are subjective to him. So then after doing that, the tool, it will automatically calculate the residual risk of it. What is residual risk? It is the inherent risk you have in place. You minus the control effect as the control you have, it will give you the residual risk, the risk which have not yet been mitigated. So the tool will automatically calculate your residual risk, which is medium low. So basically, the tool has set of questions you have. If you are interested in a demo, you can contact us afterwards, but I will go quite quickly because but we are running out of time. So the tool will give you the residual risk per each category. And then if you go to my methodology, if let's say your inherent risk is medium high, your control effectiveness needs improvement, your residual risk is medium high as per the methodology developed as per in the tool. So the tool takes into consideration the 4 risk factors set out in the Bank of Rwanda guideline. You have a customer risk, you have a set of questions for customers, you have a product and services risk, which you have a set of questions for it. You have other risk factors, which is business delivery channel. You have a set of questions for it. And then you also have a geographical risk. Geographical risk is not only for your company, but it is also about the location of your customers or any third parties to it. So this is how the tool functions. Now in the tool, we also have annexes. Remember that Christina was talking about information gathering process. To be able to fill the tool effectively, you need to gather information. How you will do that? We have annexes in the tool, which will help you gather all the information that you need to be able to complete the tool effectively and adopt a risk-based approach. So you can insert information about your customers, how many customers, individual residents you have. Let's say you have 2 customers which are from low, 2 customers which are from high, but 2 will automatically calculate the total of it. and will give you an idea of how many customers you have and how many are high risk. You also have the option of calculating how many customers are from low risk countries, how many are from medium risk countries, and how many are from high risk countries. In the tool, you also have a customer annex, which takes into account the NRA, the new NRA 2023, and it gives you an idea of which sectors are considered as high, which sectors are low risk. In the tool, you also have a product and services annex. So basically for this webinar, we have taken all the services that are provided in the NRA 2023 for banks. For example, if you have private banking, you have retail deposit, you need to assess it individually. So this annex will help you assess each product, the risk of each product individually, whether this product service or is of a particular complexity. And it will also help you to give a number of customers which have contracted each product and services. For example, how many product services have been contracted how many high-risk clients have contracted this particular product. So the tool will contain all the information relevant for you to do your business risk assessment. You also have a business relationship annex C. So basically, we know that this is only a demo for the webinar. We have taken only agents because agents represent a very high risk for banks. So you can assess each of your agents individually in this annex. You also have a country risk annex, which gives you the rating of all the countries around the world. Which countries are from low risk, which countries are medium risk, and which countries are high risk, and even give you which countries are banned. For example, you have Iran, Myanmar, and Democratic Republic of Korea. So this is how the tool functions. Now, at the end, after you have completed your tool, what the tool will do, it will populate all the information in the matrix. This matrix will help you to document, to do your reporting and filing to the bank, to your regulator. So the matrix contains all the inherent risks, subcategories of inherent risk, and it also contains the overall ratings. Now, another thing that the tool can do is to weight each risk factors. What is weightage? It allows you to allocate weightage to factors which represent more higher risk to you. So this is optional. It's up to your organization whether we want to allocate weightage, but bear in mind, weightage should be allocated in a way, but it doesn't lead to situation where it is impossible for any business relationship to be classified as high or low risk. So basically, you can't play with your weightage. Whenever you are assigning a weightage, you need to document a proper rationale with it. So basically, you can't just decrease the weightage of X risk factor because it is representing a high risk for you. For every weightage assigned, you need to have a proper rationale with it. So you can't just reduce the risk so that your residual risk becomes low. No, this can't be done. So for each weightage, you should have a proper rationale given you should document a proper rationale. So the tool will give you an overall risk rating of each subcategories and a final residual risk rating which your company have. So in the tool, you also have heat maps. Heat maps are for graphical representation, which populates what are the risks of your company, where is your company situated. And at the end, you will have a summary table, the main sheet, which gives you the net risk rating of the company. And it also contains the sign-up of the compliance and the senior management sign-up. So the tool is a very comprehensive one, which helps you risk rate your business and also adapt a risk-based approach. As Madam Fiona pointed out in the beginning, what is a risk-based approach? It helps you focus resources in areas where you need to allocate more resources. For example, after you have done this risk assessment, you will see that customer and product risk represent a higher risk for you. So you will allocate more resources to customer and product services rather than business relationship, which is low risk. So this is how to adopt a risk-based approach in a way, and also to conduct a proper documented risk assessment where all the information are covered in it. So that's all for me from my side, and then now Christina will continue with the reporting.
Thank you very much, Ibrahim. So if we go back to the roadmap that I showed earlier, so Ibrahim has covered the importance of the development of the methodology. This one, as I said, needs to be properly approved by senior management. The importance of the information gathering process through all the appendixes that Ibrahim has been showing you, and then the performance itself. So once we have done the first three, we have completed the first three steps, we need to document the exercise in a report. And this report needs to contain the key findings so that the senior management properly understands the risk of the company. And after that, the senior management, the board of directors, will need to approve same. It's okay. So then, no, it's okay. You can skip on, you can move to the next slide. So then the copy of the report needs to be, a copy of the report needs to be submitted to the Bank of Uganda after the approval of the board of directors within 48 hours, as I said before, and then policies, controls, and procedures needs to be updated and implemented based on the results of the business risk assessment. Finally, we know as well that the risk assessment, they need to be updated and reviewed whenever there is a change in environment, and at least on an annual basis. So this will be with regards to the BRA report, the risk assessment report, that is, it needs to be properly documented. And so with this step, we reach the end of this webinar. Before we move to the questions part slide, I would like to present BDO money laundering AML/CFT services. So as BDO, we provide independent AML/CFT audits, the gap analysis and implementation of frameworks. We also provide AML/CFT corporate training, different trainers tailored to board of directors, frontliners, compliance professionals, and money laundering compliance officer. And we have also transaction monitoring tools, screening services, and we also assist to perform customer onboarding services. And which is more important, we have different risk assessment tools. This is only one of the tools that we have, but we also have a client risk assessment tool to individually rate the risk of your clients. So this, I think we are reaching the end of the webinar. I don't know if Moses, James, we will have time to take any other questions since it's already 3:10.
Yes, Christina, we only have one question from Christine, and she's asking, is the rise in cryptocurrency transactions related to an increase in money laundering? I think you can be able to answer that and then end.
Okay, well, I think maybe Madam Fiona was in a better position to reply to these questions, but of course, I think it is related. We know that crypto is a very high risk sector with regards to money laundering, and it's also in the increase, it's in the rise. Most of the countries are trying to regulate and pass regulations with regards to cryptocurrencies, and I think also it is related to the increase of risk for the banking sector, of course. Yeah.
Okay, thank you so much, Christine. I don't know, Fiona, do you have any addition to Christine's answer? Fiona, are you still there? Okay, I think Fiona is not on the call. Thank you so much, everyone, for joining this training. I hope it has been very informative and very critical in highlighting some of the issues relating to risk assessment. And hopefully from here, you can be able to go and look into your own frameworks and decide whether it's important to adjust your frameworks or develop new frameworks for your risk assessment. I would like to also emphasize what Christina talked about in relation to the tasks that we can assist you with. Feel free to reach out to any members of the team, those of us who are here, and any other person from the BDO network to assist you with any risk assessment item you may need. Otherwise, thank you all of you once again for joining. Thank you to the panelists for their presentations, and particular thanks to Fiona for creating some time to join us here and inform everyone on what the FIA thinks about this particular issue. Thank you and bye.
Thank you very much.